Okay, guys, so this is the second weekly recap for April. We had a really bullish week, and that's because of the war tensions, and also the Strait of Hormuz was open. So going to Monday, I'll always ask myself this question: where are we delivering from, and where are we delivering to? So this new week opening gap was almost 1.5%, and it was truly just a leg of manipulation, especially if you look on the 5-minute time frame. We had a lot of liquidity here, and these are just orders waiting to get filled, right? And once they got filled, this manipulation, this new week opening gap was just completely disregarded. And what I mean by that is you should treat these gaps as like fair value gaps, and what we've been doing, especially even on the higher time frames, we are completely just disrespecting bearish fair value gaps and just delivering towards our higher draws on liquidity. So we have relative equal highs here. That's another draw, and we also have previous day high, which is another draw on liquidity that we can use. So going into the day, what I'm seeing is just we're building a lot of low resistance, and that just happens in London, Asia. And as we get closer towards market open, what I really want to see is I want to take longs towards our previous day high and even towards this draw on liquidity. And on the 1-minute time frame, we see an SMT with the S&P 500 here. So there's an SMT divergence right here. And also we want to take retraces. So this is going to be a 5-minute retrace. And we have this low here, this high. If we use our fib extension, this aligns with the 0.75 level, and that's like the most discount that we could be. If price wants to soup this 5-minute within this intermediate low, we can do that, but I'm not really anticipating it. I just really want price to go higher, especially since on open we're just generating low resistance liquidity, and that's like a great target that we can have as well. So the next candle printed. Okay, now this is a really great inverse, but the only bad thing is it's inside this gap and it has like a really bad close. But we can take it, honestly, just because we are really bullish on the day. And we could have our stop this low. Go for like a 1, 2, 2. Where is it? Yeah, it's about like a 1 to 2 RR. And here, this would have been a great re-entry if you didn't like that close, because if we use a fib tool, we are kind of bouncing off our equilibrium. Honestly, this would have been like a great re-entry as well. So let's just enter again. Great long position. Can target like the same sort of area. Oh wait, forgot to put my TPs and our stop loss. And then we're just chopping. We're just chopping. Can we go to the 5-minute? Can we skip? Skip. Okay, there we go. So honestly, another really bullish day, especially when you're trading all-time highs. What you really want to do is take 5-minute retraces, and that's basically what we did. This was a good setup because on market open, what we had was some good manipulation to a 5-minute gap. We had an SMT divergence, and that's great because this indicator that we're generating low resistance on market open, that's great targets for us to use. And I just think the draw was really clear, the bias was really clear. So today was a good day. Let's move on to Tuesday. Okay, so for Tuesday, I was also very bullish, especially because on the higher time frame, especially the 4-hour, we're once again just respecting bullish gaps, disrespecting bearish gaps, and also another thing is we've also completed our sell model. And what that means is there's a clear sell side of the curve and there's a clear buy side of the curve. So this is our sell side, and then our buy side is going to be like that. And our main draws on liquidity are going to be this intermediate high within the 4-hour gap and all-time highs. So that's my draw on liquidity. So let's go to the 5-minute time frame. So this is a London session. The only thing we have right here is just data highs, which is a really strong draw on liquidity. But I don't anticipate these lows to be draws because I'm very bullish. So we are going to have to use some sort of gaps to send price higher. So let's skip until market open. And on the 1 minute, what happens is we're accumulating. Then we also get a nice manipulation. And then we get a distribution. And I honestly wouldn't have taken this just off this inversion, is because this low time for manipulation is really close to our open, and there wasn't a big rejection from the move, so it wasn't even like a Judas swing, and that basically just tells me that we're just going to be pumping for the rest of the day. And instead of trying to just long after this inverse, you honestly, the better move here after we take data highs, right, is to catch a retrace on this move. And I think that's better because we are so obviously bullish, and we did get a really nice AMD reaction, and we're holding these 5-minute gaps, 15-minute gaps, 4-hour gaps, so we're clearly in very bullish order flow. So we kind of should just expect very little manipulation. So this is a trade that I would take. We got an inversion here, and it's a continuation of the move. And in market conditions like this, you can't really expect retracements where it's like really close to equilibrium or really close to OTE or like discounted areas. You kind of have to trade knowing that price is going to make really shallow retracements. And so that's what you should be doing. You should put your stop loss right here. And then your TP, you should just go for a nice 1 and 2 RR. The draws are obviously very high away. I mean, you can target those draws, but you're probably going to be in a trade for like 2 or 3 hours, and I kind of don't like that. But yeah, 1 to 2 RR is what we like to do. So this is another great sign. So we're respecting our bullish gaps. We're always going to be in bullish order flow, especially, yeah. Oh my, okay. There we go. We literally just hit TP. Honestly, this trade I would say is like a B+ trade. We did have accumulation, manipulation, distribution. We were in very clear bullish order flow, especially on the higher time frame, lower time frame too. We also had data highs, and I think the bias for this trade was very clear. Same with the one on Monday. So for Wednesday, obviously, I'm gonna be bullish on the day. We're coming closer to the draws that I marked previously with the equal highs and the soup model, but I think now our final objective and is going to be this all-time high here. And on the 1 minute or 1 hour time frame, what's really clear to me is that we're respecting bullish gaps, and it's really clear because there's a bullish gap here, and it's really supporting price because there's this huge rejection block, and also all the 1 hour gaps are being completely rejected. So obviously I'm going to be very bullish again for the day. But okay, so New York session open, we do have a data wick here that we can target, but price is nearing that. Okay, so what we took out our data high, we're now coming down. We swept a little bit of our low resistance. We didn't fully mitigate it, which is kind of a bummer. On the S&P, it's about the same thing, just more low resistance that we're building. And then there isn't any one setup that I'm really confident on, but later on, there's like a really good setup that presents itself. So, obviously we're pumping, really bullish. Now, what we're trying to do now is catch a long position off of this move, and we're trying to trade a retracement off of it. So now we are given that opportunity. So if I mark out this fib, and there we go, that's our 5 minute. And we just get a 1 minute interest signal, which is our inverse fair value gap here. We also have a rejection block here as well. And we swept internal buy side liquidity. So we also have this 15-minute gap and a nice 50-minute rejection block. It's going to send us higher. A big thing when you're trading conditions where price is always going to be bullish, you're always wanting to target internal range liquidity, because it's really hard to find external draws, and in terms of like old highs or orders waiting to be filled, because they don't exist. So you kind of like within this price action, you just have to trade retracements, whether we enter like shallow discounts and we get a 1 minute entry signal and a higher time frame narrative. That's literally all you have to do to trade all-time highs. That's like a 1 to 4. And we just hit TP. So honestly, like a really great continuation trade, but it's a really great example on how you should trade all-time highs, especially when we don't really get great low time for manipulation, especially towards open. And this trade was like really late into the day, probably when I would have stopped trading, so I don't even know if I would have taken this. But in this in these conditions, the only reason we trade New York session, right, is we want to catch low time frame manipulation, and we want price to either respect old highs and make sure we have confirmation that orders have been filled, and that honestly just doesn't happen anymore, just because low time frame manipulation, there's so many more bulls in the market, and like it's just hard to even manipulate the markets when there's so many orders. And that's like the biggest lesson from Wednesday, is just to target internal range liquidity and to external range and just trade continuations. Okay, so today is Thursday, well, in the back testing engine, and then we literally just hit all-time highs. And the biggest thing is how you want to trade all-time highs is there are no external draws on liquidity. We have to target internal range and trade it to external range, and that's the only way you can trade all-time highs. And that's the reason is because price is so much in a premium that if you short, you're gonna get cooked. And if you're shorting all-time highs, I think you're genuinely just losing all your money. There's no edge in doing that. And so we have gaps here that I marked. On the 5 minute, we're accumulating. We manipulated, which aligns the high time frame gap. This is honestly an A+ short because we are accumulating, manipulating. But the only reason you wouldn't take this is because the bias isn't there. You have to trade with a bias. And okay, so there we go. So we got a manipulation leg into our higher time frame gaps, and these gaps should support price in order to trade higher. And what I mean by that is we get the short setup, we come down into our gaps. Now what I really want to see is an inverse fair value gap. This inversion is my lower time frame entry signal that tells me the price is going to go higher. Okay. Yeah. You can enter long here. You can target just this range high. You can put your stop loss here. This would be like a 1 to 5 RR. Long position here. Okay, so this is another great re-entry. Especially because we're also respecting equilibrium. So it just played out. So we have two like lapping gaps that support price to go higher. We did have actually good low time frame manipulation that came down to these gaps to give us a nice draw on liquidity to go higher. Because expect like when you're trading all time highs, you either just target a range high or you just trade 1 to 2 RR. But pretty clean setup today. Honestly, it might be like one of the best trading days of the week, especially because the bias was just so clear. And like if you took the shorts, like this consolidation on the 1 minute here is just like such a good signal that like shorts were obviously going to fail, because you never want to see like consolidation. We're just generating liquidity. That's literally all we're doing. We're generating liquidity, and this is another target for us to take. And we've been generating liquidity here as well. Those are also targets that we can take. And another big lesson is you just can't take shorts into gaps because they would never play out unless you get break even. Okay, so this is Friday. Once again, our bullish is our bias is very bullish. We're going to be targeting all-time highs as our draw on liquidity. So London session expanded a lot, and on the 4-hour, what's really clear is on Thursday, what happened was we came down to this gap and respected it. That's another great sign of bullish order flow. We're maintaining bullish structure. What is this? We are maintaining bullish order flow, and on all the time, on all the time frame, we're just maintaining bullish order flow. So on the 5-minute, London session just expanded a lot, and what happened was New York Open manipulated, and we were generating low resistance, like literally as market open. And what happened was we got an SMT at these lows. Equal lows is a great sign because that's like a reversal pattern. We also had a 1-minute IFVG, a 15-minute rejection block, and we also had this 15-minute FVG as well, and we are targeting all-time highs. And this is just another continuation setup. Like this whole week, I've been just using the fib tool to trade retracements, and that's literally how you trade all-time highs. You trade retracements, where it's a 1-hour retracement into a gap, whether it's a 5-minute retrace with the lower time frame entry signal, whether it's like an SMT, an IFVG, a rejection block, and we also always we need some sort of gap that's supporting price higher. That should be like when you're trading all-time highs, that should be like your number one thing is you need a gap supporting price. So I think that wraps it up for this week's recap.